Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Tuesday, first day of September 2020, and this is the daily report for gold and silver. We had gold touch upon $2,001 once again today, rose above it. However, it was unable to hold that price point. That led me to send out a trade alert, raising our stops to protect in case the market wants to move a little bit lower first. Interim, long term, I'm extremely bullish, but what happens day to day can be anybody's guess, so to speak. I do have a typo to report, and that refers to the SLV, and we will cover that at the end of the show. But first, to the price board. Interesting action in the precious metals markets. Gold futures, this of course bases the most active December contract, is currently fixed at $1976.60, down $2 on the day. What is most interesting is the fact that it traded to a high of $2,001 and was not able to hold above that price point. That tells me that there is some real resistance at $2,000. GLD, which is related to spot pricing, did gain about 22 cents per share, 185.05. When we look at silver futures, that lost about 23 cents, 28.36.5 cents. SLV lost 0.09, and it is currently fixed at $26.14 per share. And lastly, the dollar did have some strength today, up about 0.2% at 92.33. We did send out a trade alert this morning to raise stops, and on today's show, I will detail why I was prompted to do that and what charts we were looking at. Let's go ahead and look at our technical studies. As you know, once gold achieved its all-time record high, and this occurred at the beginning of August, I believe August 6th and 7th, when market forces took gold pricing right around 2080, we began to see the market correct. The first correction itself took gold from that price point down to about 1880, and then we had a succession of lower highs as we have here, and a succession to some degree of higher lows. And what we saw was not a simple ABC correction pattern, but rather what we call a pennant formation. That occurs, of course, when you get a compression in range. Recent activity took us above the resistance line, which I believed would become support, and we saw that occur for a short period of time, but as you can see, we are currently right back at that line. We're not below it, not on the 240-minute chart, so we still could see this market move back up, or we might even see it take another turn to the bottom here and then move back up. My sense is that we will see it firm in this area, but as a protective measure, we went ahead and raised our stops. Now, in the case of gold, we're in at 56.50. We moved our stop to approximately 1960, which is this particular price point here where I've drawn a red arrow. And the reason for putting it at this particular price point is because it is below these recent lows that we have seen over the last couple of trading days. My recommendation is to maintain your long gold position at 1956.50 and maintain your current stop at 1960. And traders, what we are looking at is a daily chart. This bases the continuous contract of gold futures, and it is a model or a projection on what we could see, and of course that is contingent upon prices moving back above this resistance line, which has not been able to become a support line yet. My belief is if we do see the market take off and go back into rally mode, we could inevitably end up at around call it 2250. Now realize that that would not be a straight parabolic line up, but rather we would have a series of rallies followed by corrections. We would get 3 impulse waves, we would get 2 corrections in between, and it could look something like this. So that is our long-term projection. In terms of our initial target, if the market continues to trade higher and we are in this trade, I would look at around 2120 as our exit strategy in terms of a price point. And as far as our silver trade goes, we also move stops up there. What we've really been looking at is that same kind of a compression triangle, except that with silver we saw a much more defined breakout over the last couple of days, and we are remaining above that. However, we did move our stop to approximately 2780, which puts it under these recent lows right here. And traders, lastly, I did have a typo in the trade alert I sent out in regards to where to move our stop up on SLV. I put 2298, which was the old stop. Our recommendation is to move your stop to 2575 and maintain your long SLV, which we entered at 2510. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.